What's up, everybody? It's Thursday, August 4th. So, we had a mixed day in the market. NASDAQ did well. NASDAQ was up, Dow was down a little bit, and S&P was kind of flat, maybe down slightly. We were down in the morning. I sent out an email to my subscribers saying you got to buy that dip, and then we had a recovery. So basically conditions are the same. There's not a lot I can really add to what I've been saying recently. It's all about these flows now are definitely expanding. We are well above, we are about 70 billion above the April tax drain, so we've recovered all of that plus an additional 70 billion. August is going to be a big month. I keep repeating that. We have next week, we'll get a quarterly interest payment of about 45 billion. You know, it comes 4 times a year. So August, we're going to get that quarterly interest payment. It'll bump up. We will be, well over 100 billion. Well, what am I talking about? We're going to be close to 150 billion over the April tax drain. So if you take 324 billion plus another 150, we're talking about a 500 billion rebound. I spoke about this yesterday, a 500 billion rebound in net flows into the economy. That's 500 billion increase in the financial balances of the economy, the non-government, however you want to term it. And that is what is behind this improvement in the stock market. Everything I told you, I said we're going to take out the mid-June highs. The NASDAQ already did that. The other averages will follow through on that. There is no impediment now to this rally. Now, of course, you can get these headline days where people freak out because some Fed official said something or something like that. That's behavior, but it's behavior based on emotion. It's behavior based on really a lack of understanding. It's behavior based on a very myopic view of what drives the economy. I mean, again, everybody believes it's all about and nothing else but monetary policy. They have the wrong understanding of what rate adjustments mean. They have the wrong understanding of inflation. By the way, on the inflation front, we got the first report from GasBuddy. GasBuddy.com tracks retail gasoline prices in the United States. We got the first report of a station in Oklahoma at $2.99 a gallon. On that note, crude oil today traded in the $87 handle, WTI. Now I said yesterday, I do not think we're going to see much lower on oil prices because we're getting a rebound in economic growth. Remember, we had 2 quarters of negative economic growth that impacted demand, and the market is reflecting that. Prices have come down. But we are now back on a growth track. Okay, it's not going to be like incredibly strong growth, but we'll see positive growth in the third quarter. And we're probably even going to see positive growth in the fourth quarter. So second half of the year, with the exception of, like I've been telling you, we're going to see a downturn from mid-September into probably mid-October, something like that. But we should see positive growth for the second half of the year. And that will firm up demand, number one. Number two, in September, don't forget these draws from the Strategic Petroleum Reserve, which have been going on every week, and that has helped to raise inventories of crude. Those draws are going to end, all right? So we could get I mean, that's the SPR draw, and so we can get back into commercial draws where commercial stocks start to come down as we go into fall, as we go into winter. Distillate inventories are still very low. I think there's something like down 20% year over year. So, I mean, you know, we get a cold winter, and that's going to be problematic. I do not see, I'll repeat, I do not see oil prices coming down much further. As a matter of fact, today, on this dip we got down to like 87.90 or something like that in WTI, and it bounced up a little bit. I was buying oil stocks today. I added to my position on Valero, on Phillips 66, on Chevron. I think I maybe got filled on ExxonMobil. I don't remember, but the three I mentioned, I added to my position today as those stock prices sold off. It's all about growth coming back in the third quarter and probably in the fourth quarter. And again, that is the replenishment of these flows that were drained out in April, and really April and June, those months. I mean, we took some hits, and that's exactly why the stock market was having so much trouble. I mean, prior to that mid-April tax drain, and this is something you should be aware of on an annual basis. I mean, we're always going to have this sort of effect. Now, last year, because of, and the year before, because of, you know, unprecedented amounts of fiscal stimulus for the COVID, for the pandemic, the negative impact, there really was no negative impact, because it was immediately offset with, you know, this barrage of spending into the economy to support economic activity. We don't have that anymore now. We're getting back to what I would call more or less a normal fiscal pattern. But I will mention that this new bill that the Democrats are proposing, which is like it's an environmental, it's a prescription drug, this thing that Manchin finally said okay to, that's like a 400 billion, maybe close to a 500 billion bill. It started off, I think, something like 200 billion. They're close to voting on that. I think they're going to vote on that next week. And that could be a big boost. Like, you know, I haven't even been talking about that. And that kind of came up out of nowhere because it looked like any new fiscal initiatives were basically dead when, you know, earlier this year, Manchin said, you know, he's out. He's not going along with any new fiscal. But now all of a sudden, you know, in the last couple of weeks, this thing popped up and Schumer and Manchin worked out some kind of deal. And so that's something to think about for the second half. And then going into 2023, actually 2023, with this bill passing, and then what should be like a really big increase in Social Security. I mean, this year alone, Social Security is like up almost 60 billion over last year. I mean, that is doing a lot of the heavy lifting of fiscal this year. And that's from the cost of living increases. We're going to get another one next year. And don't forget, every year now, the baby boomers, I mean, that's my generation. I'm eligible for Social Security right now. I'm not taking it right now, but I'll be taking it. Don't worry. You know, that's new recipients every year by the tens of thousands, and that's going to roll on, you know, for at least probably the next 5, 7, 10 years until we all die off. I hope I last longer than that, but I want to collect on that. I worked hard for it. So yeah, I mean, that is like a stealth, massive fiscal stimulus ongoing. It doesn't need to be voted on. It just happens automatically. Medicare too. So those are huge. Those things are huge, and they're doing most of that. And of course, defense. I mean, defense is, it's not a non-discretionary item. It's discretionary, but in the United States, Congress treats that like as a non-discretionary item. I mean, you need 50 billion for Ukraine? Boom, there's 50 billion. They never ask, like, how are we going to pay for it? Like when we wanted to rebuild our infrastructure, it's like, oh, I don't know how we're going to pay for it. Or when I wanted to give people a little bit of extra money you know, when they were out of work due to the pandemic, I don't know how we're going to pay for it. But, you know, when it comes to 50 billion for Ukraine, boom, that was done like in half a day, and nobody asked how you're going to pay for it. Now they're talking about doing the same for Taiwan, and that money, most of that money doesn't go. It doesn't go to Ukraine. It goes to the U.S. defense industries. So there you have it. So anyway, yeah, bullish day today. Yesterday was another net addition. I think it was something like, let's see if I get this right. It was like 19 billion. Yeah, around 19 billion yesterday. So, or 17 billion. So we're up to like 70 billion over the April tax drain. So basically that means 400 billion has been, and think about that. Like, we're going to get another 400 billion on this this fiscal bill that's going through, but I don't know, that might be spread out over a number of years. We just got 400 billion stealth. Nobody's talking about that, you know, in the last 4 months. And basically we really got it, what, in you know, June and July. And we're going to get a lot more this month in August. So, I mean, you don't fight these flows. These are the things that drive the economy. Monetary policy is price setting and income redistribution. But, you know, I look at the entire swimming pool and I'm just, you know, is the water going up or is the water going down? The water goes down when the government taxes, and if it if it taxes more than what it spends, the water gets drained out. And when it spends more than it taxes, the water level goes up. And that's what you have to be focused on. That is the key thing. If you could step back and just keep your mind fixed on the big picture like that, you know, what is that macro environment? Is that going up, it's lifting everything up, or is it draining everything down? If you could train yourself to look at it like that, you have the ultimate grasp of the big picture. You can do very, very well. You don't have to be afraid. You don't have to be scared when things go down. And when things are way, way up and you see that drain coming, because we know when that's going to happen. We know the times of the year when that's going to happen. When things are way, way up and everybody's super bullish and you're thinking, oh, maybe I should take some money off the table, or maybe I want to speculate going short. And by the way, this is not just affecting the stock market. This affects the foreign exchange markets. This affects other risk assets like gold and commodities and oil. This affects things like the bond market. I mean, when you understand this, these massive flows in and out, I mean, you really have total control over strategizing your portfolio in a way. I don't even want to say that it's better than what the other people are looking at is just completely wrong. I mean, this is the thing you have to understand. And it gives you complete confidence and control over what you're doing and your own self, your emotions, because you're confident, you know, you have information, you have knowledge. And like somebody said here, what I talk about is very scientific. It is. It is. All right, everybody, don't forget, go to my website, www.pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.